Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Has the gold to silver ratio peaked? This is going to be the title or the article that we dive into, the subject that we dive into in today's video. We saw the gold to silver ratio go as high as 125 to 1, meaning it takes 125 ounces of silver to equal 1 ounce of gold, which the historical average is around 50 or 60 to 1. So it's extremely high. Now what that means is gold is either over appreciated or silver's under appreciated. Gold is overvalued or silver's undervalued. And more than likely it means that silver's undervalued. But why are silver prices so cheap? Are silver prices broken? That's what we're going to be talking about in today's video. So before we start, make sure to smash that like button. Make sure you subscribe. If you're new, I post daily videos. If you want the newest, latest, freshest, most up-to-date information in the world of precious metals, I am your guide. This is your channel. So anyways, the link to this article from Kitco will be in the description. The gold to silver ratio continues to garner a lot of investors' attention as it remains above the 100 points, well above its historical average. But one market analyst notes that there are real reasons why gold has outperformed silver in the last few years. Eric Norland, executive director and senior economist at the CME Group, said in a commentary Friday that the ratio's all-time high in March was years in the making. He noted that the ratio has been on a steady uptrend since its bottom out in 2011 at 31 points. So it got to as low as 31 to 1 in 2011 when silver was $50. As of Monday, the gold to silver ratio last traded at 109 points, meaning it takes 109 ounces of silver to equal the value of 1 ounce of gold. Silver's underperformance has been a slow, steady drip, not rising as much as gold on average during rallies and falling more than gold on down days. And the ratio has recovered a little bit, but I think there's a long way to go. People are speculating the ratio may even go higher, meaning gold will outperform silver even more. I definitely don't think that's true. I think that silver will catch up and outperform gold. I think the time is coming. Jim Rogers, millionaire investor, even said silver's time is coming. If you're going to invest into anything in the next 3 to 5 years, it better be silver because that's going to be the biggest boom where the most profits are. So although Norland is not expecting to see a significant shift in the ratio anytime soon, he added the ratio could have reached its zenith. Norland noted that recently, this virus pandemic has highlighted the significant differences between gold and silver, which it has, and let's talk about that for a second. Silver is used more as an industrial metal. Gold is used more as a monetary metal. Gold is used as a safe haven asset. Silver is more tied to the economy, and if the economy's hurt by this virus, then silver's hurt as well. So let's see what they have to say about this. So, Norland noted that recently this virus pandemic has highlighted the significant differences between gold and silver. Gold as a monetary metal is shining bright as safe haven and inflation hedge as central banks and governments flood financial markets with liquidity and dropping interest rates to the zero-bound range. So it's exactly what I just said. Meanwhile, silver demand in the industrial sector has all but dried up as the global economy has been decimated by the virus pandemic, which is also what I said. Silver is more of an industrial metal, gold is more of a monetary metal towards safe haven. Norland said that although silver is classified as a precious metal, it is really an expensive industrial metal. Industrial uses are accounted for 68% of silver demand in 2019, he added. Although this virus pandemic could further dent silver's industrial consumption, Norland said that there is some hope for the metal. One of the biggest hits to silver's industrial demand has been the growth of digital photography. And silver has many different uses, from 5G technology to electric vehicles, right? So we have some future technological advances that silver is going to be used for. Norland noted that 20 years ago, 266 million ounces of silver were used to develop photographs, representing more than 1/4 of mining production. But he added that number is expected to shrink to 53 million ounces in 2020. But yes, it's shrinking in photography, but it's boosting in 5G technology. It's boosting in electric vehicles. So it does drop some places, but it accounts for and adds up other places. Nothing else has fully replaced this demand, but 5G technology will This is why these articles are not always too correct. Perhaps the good news for silver is that traditional photography can only die once. The decline of traditional photography and silver's use in industry explains the large extent to the slow, steady nature of its decline versus gold. And that's one of the many reasons why. Not only stabilizing silver demand will help reduce the ratio, but Norland said that the peak in gold demand could also deflate the critical precious metal gauge. The critical element that has been driving gold prices, Norland said, is monetary policy. And that's true. When they pump in all this money, stimulus packages, when they flood the market with money, gold price, since it's a monetary metal, increases. And gold is directly correlated with inflation or hyperinflation. He said that he doesn't see interest rates falling into negative territory, which could limit gold's rally from current levels. The good news for silver relative to gold is that the Fed appears unlikely to cut rates further, he said. If the Fed keeps rates near zero for the next several decades, as Fed fund futures currently priced, this doesn't really benefit gold or silver, or over silver. Moreover, if the U.S. has a strong economic recovery and the Fed begins to ponder rate hikes, the history of the precious metals Fed funds correlation suggests that this would likely be more negative for gold than silver. Along with interest rates holding steady, albeit near zero bound, Norland said the weak central bank demand for gold could also lower the ratio. The gold market saw record central bank gold purchases in 2018 and near record gold demand in 2019. Although central banks are expected to remain net buyers of gold in 2020, demand is expected to be significantly lower. Central bank buying of gold in the past decade can be attributed to almost entirely central banks in emerging markets. With China's trade surplus now evaporating because of the virus, its foreign reserves may begin to decline. If so, that might curb further gold purchases, which is definitely true. Russia and other commodity exporters might not have the revenues to purchase more gold, no matter how uncomfortable they feel with the direction of monetary and fiscal policies in Europe and the U.S. Some countries that were in a position to buy more gold during the 2010s when the commodity prices were high may no longer be in a position to do so in 2020s. So as people try to put a backup to restore their monetary policies, to restore the faith in their dollar, they buy gold and silver, primarily gold, to kind of keep a backup so they keep store value, since gold is a store of wealth. But right now, since the economies are in such a harsh position, they might not be able to like they were once upon a time. Although there are stark differences between gold and silver, Norland also noted that two precious metals could both face difficult times ahead as markets try to come to grips the impact of the virus will have on the global economy. And that's definitely the part. We don't know how much longer things are going to be like this. We don't know. We don't know the extent. We try to speculate, but we really don't know. We don't have a crystal ball. So times are going to get interesting. And that's the part that you have to be on your toes about, because things could get a lot worse, things could get a lot better. Depending upon the circumstances with everything happening, it's going to depend. The economic impact of the pandemic is above all a demand shock. High rates of unemployment and underutilized production capacity could keep a lid on consumer price inflation for a long time, he said. Will short-term deflation diminish gold's value as an inflation hedge? Silver and especially gold are caught between short-term deflationary implications of the pandemic and its possible long-term inflationary consequences. So if we are looking at silver and gold for the short to medium term, short-term prices might stay lower, but in the medium to long term, the 3 to 6 month range, the 3 to 5 year range, we could be looking at much higher prices, given the circumstances, given the information. Now, to what extent? Who knows? Some speculate $100+ silver in 5 years. Some people speculate $20 silver in the end of the 3 to 6 month range. As long as you're patient enough, you should be able to capitalize off this. But some people are going to sell themselves short. Some people don't have the patience. Patience, balance, and budgeting are the three most important things in investing. And if you have the patience, then you have all the time in the world to let these markets play out. But it does depend upon your exit strategy. Maybe you've been stacking silver for 20+ years and you're ready to get out of the game sooner. But you don't want to sell yourself short, especially if you put all this time and energy into it. So anyways, I'm going to wrap this video up here. If you did enjoy this video from Kitco, or this little article from Kitco, make sure to smash that like button. See if this video can get 150 likes. Everyone go like the video right now. Thank you so much for supporting the channel, especially if you tune in this long into the video, if you watched the video this far in. I appreciate you so much. I definitely think that we're all going to be in this together, and I feel the community is alive, right? We're alive when we're kicking, and we are determined to keep stacking. So anyways, I'm going to wrap this video up here. Thanks for tuning in. The link to this article will be in the description. This was Silver Slayer. I'll see you guys soon. Peace.